What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update for you guys. So what we're going to cover is exactly the evidence that we have at the current time that proves to us that the AMC short squeeze could potentially be right around the corner and happen any day now. We have a lot of evidence for this, and we can actually compare the data that we have for what happened when GameStop actually started its massive rally up. So we have a lot of important information to cover in this video, so make sure you guys stick until the end. But again, if you guys have listened to any of my previous AMC videos, I try not to give specific dates for when we could expect this squeeze to happen. I don't think that really helps out anybody, and I think it does more harm than good, because if we do not see the squeeze by the time that all of us YouTubers are calling out for it to happen, I think that it really gets a lot of people discouraged that are new to this movement. Now, I know there's a lot of individuals that are in this for the long haul and are fully prepared to hold for many years. Now, when I say hold for many years, this does not mean at all that I think it is going to take years for this to play out. I actually think it could happen within the next month or two, but we really don't know, which is why I think it is best for everyone's psychological peace of mind to have that preparation and that strategy. But again, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. And if you guys would like to help out and support the channel, make sure you guys check out that Webull link down in my description. All you have to do is sign up for an account, deposit over $100, and you get access to 2 free stocks, potentially valued up to $1,850. We're also going to go over in this video this massive spike right here and what these theories are that I have for it, some institutional ownership, and some new proposed rule changes. Now, first, I want to talk about this massive spike that we saw after hours yesterday. The spike was as high as 9%, and we did see some heavy volume. So we can see that we pretty much closed at around this $9 mark down here, and we saw a massive rally up to almost $10.50. Now, when we take a look at the volume numbers right here, and we come up over here, I actually can't freeze it, but up in this top left corner, you can see that the volume was 3.8 million for this candle. It was pretty red for this candle right here, and then pretty green again, 2.6 million in buying volume. Now, there's 2 theories that I want to go over as to why we saw this massive rally up. The first one is what everybody has been saying. It is possible that a hedge fund or an institution has closed out of their short position. That is very likely, especially that we've recently seen these massive spikes in the short borrow fee rate. Now, the second option in the theory that I have for why we saw this massive rally up is slightly different, and I don't think anybody has talked about this. So I've been talking a lot about gamma squeezes and delta hedging and exactly what that is. So if you are a bit confused on what exactly a gamma squeeze is, make sure you go watch my previous videos. I think all of you guys, or most of you guys who have been watching my videos, pretty much understand what they are. But essentially, in order for this to happen, the institutions need to do something called delta hedging, where they go out on the open market and buy the appropriate amount of shares to cover a specific amount of options contracts. And if you did not know already, one options contract controls 100 shares. So for every one of these contracts right here, the institutions would have to go out and buy 100 shares. Now, I've been saying this a lot in my previous videos, but we have a monthly expiration date coming up for May next week. And typically, we see a lot higher open interest on these expiration dates and volume. So we are not seeing as much volume today, but as we get into next week, we are going to see a lot of these open interest numbers spike up. And when we compare the May 21st expiration date, which is next week, to the expiration date for this week, we can see that there's a lot less open interest on some of these contracts. Now, what could have happened is that a lot of these institutions know that AMC has the potential to get up to $11, $12, or even $13, and they want to make sure they're hedged appropriately. So what they did was in the after hours trading period, they bought a certain amount of shares to cover a specific amount of options contracts. I also want to bring you guys over to a couple more of these 13F filings, and I have found something pretty interesting that I have not seen anybody else cover. So when we come over back to Fintel, this is going to track all of the 13F filings, which basically shows us what all of the institutions have been buying in the first quarter of 2021. Now, if you look at the overall numbers for the institutional buys and sells, the buys massively outweigh the sells. It's about 240 million in buys versus about 1 million in sells. So institutions are extremely bullish on AMC going forward. Now, when we look at this specific filing right here, State Board of Administration of Florida Retirement System. Now, honestly, when AMC squeezes, it is going to put a lot of people into retirement anyway if they would like to. So AMC might as well just be the best retirement system, but again, not financial advice. So the State Board of Administration of Florida Retirement System owns at the current time 64,745 shares. This is pretty interesting to me because typically we see these retirement funds usually go for safer assets in order to make sure that their employees or individuals working for the state in this case are going to have a solid retirement fund to fall back on when they reach the age that they want to retire. Now, they are actually buying a significant amount of shares of AMC at the current time. What this shows me is that this fund has a lot of conviction on AMC going forward. And when this squeeze ends up happening, a lot of these individuals working for the state of Florida, as we can see right here, are going to have a significant portion of money that they may be able to sell and maybe even retire on. So that could create a problem actually for these workers in Florida. They actually may not have enough people wanting to work if they made all of their money on AMC in their retirement fund, but that is going to be a discussion for when AMC squeezes. Now, I also want to bring you guys over to some of the evidence as to why I think that AMC is going to be squeezing a lot sooner than a lot of us are expecting. So moving over here, we can see that the recent data for AMC on iBorrowDesk for the short borrow fee rate is unbelievable right now. So over the past time that I have been recording this video, this shares available amount went from 700, then down to 400, back up to 800, then back down to 400, and the short borrow fee rate at the current time is 77.1%. That is some of the highest that we have seen recently. Now, when we compare this to GameStop, when GameStop first started its massive rally up and its squeeze, when we come over to iBorrowDesk here, we can see that the short borrow fee rate on January 25th was about 33%. Now, a couple of days later, when this squeeze really started to kick off on the 26th, the short borrow fee rate spiked up to 84%. We are well on our way to getting to those levels, and that suggests to me that it is very possible that the squeeze is right around the corner. Now, I also want to bring something up to you guys. When we look at this chart on iBorrowDesk, we can see that the short borrow fee rate on AMC has crossed well above this 80% mark a couple of times. Now, there is a key difference that you have to understand of what is happening now versus what was happening previously with AMC when the short borrow fee rate was spiking up this high. I don't know what happened there. But the key difference that I want you guys to understand is that there is a whole movement behind AMC right now. Retail, as of the last time that Adam Aaron was able to do a share count, owns 80% of all of the AMC shares. I highly doubt that retail owned all of those shares back when the short borrow fee rate was up in these 100% marks back here. This really suggests to me that we are getting super close to this squeeze, and you guys should buckle up because it is going to get very interesting very soon. Now let's get into a couple of these new proposed rule changes and how they are going to be affecting AMC in the near future. So this first one right here, we briefly covered in my previous AMC video. It has to do with the speculation that the New York Stock Exchange or the SEC wants to suspend a ton of dark pools, and this is not necessarily the case. We have been able to find more evidence, so shout out to this Reddit user right here for putting this out here. So they give a brief background as to what exactly this rule filing says, and here's what happens. Certain rule changes by exchanges are immediately effective. The rule change takes effect when the exchange lets the SEC know because the exchange deems the rule change non-controversial. I won't get into whether this should even exist as an option here. It's a long and conflicted story. The New York Stock Exchange filed a change to co-location as immediately effective, and several clients of the New York Stock Exchange contracted to receive this service. The SEC then decided that the rule change was not okay and told the New York Stock Exchange they couldn't do it. The NYSE is asking the SEC to allow them to provide the service while those clients transitioned off of it, but because those clients, including other exchanges, likely rely on it for their New York Stock Exchange data. So that's essentially what is going on here. This one really does not have a lot to do with AMC right now, but this one did get blown out of proportion, so I want to make sure you guys completely understand what is going on here. Now, the second proposed rule change that we definitely have to go over is going to directly affect Citadel's business model and put a massive damper on the control that they have in the market-making business. So when we come over to this one over here, we can see that new rules from the SEC to enhance competition on the New York Stock Exchange. So shout out to this individual right here on Reddit for posting this. We can see that self-regulatory organizations, New York Stock Exchange LLC, order granting approval of a proposed rule change of new rules providing for the registration and obligations of non-DMM market makers. So non-DMM market makers would comprise a new category of market participants on the exchange and would have responsibilities different than those of designated market makers. Now, when we come over to figure out exactly what a designated market maker is, a designated market maker is a market maker responsible for maintaining fair and orderly markets for an assigned set of listed stocks, formerly known as specialists. The designated market maker is the official market maker for a set of tickers. In order to maintain liquidity in these assigned stocks, will take the other side of trades when buying and selling imbalances occur. Now, when we come back over a little bit further, we can see that the New York Stock Exchange did not have non-designated market makers before. There were only designated market makers and supplemental liquidity providers. Now, when we come over to see exactly what these are, supplemental liquidity providers are one of three key market participants on the New York Stock Exchange. Supplemental liquidity providers are market participants that use sophisticated high-speed computers and algorithms to create high volume on exchanges in order to add liquidity to the market. So what we can essentially see here is, according to the exchange, the proposed rules are intended to provide for a new category of market maker that the exchange believes will promote competition on the exchange by enhancing the range and diversity of market-making activity on the exchange. This is huge. When we come over to this recent article that we have seen here, new SEC chairman sets sights on Citadel Securities and Virtue. Some of the main points that he brought up is that Citadel is controlling an overwhelming amount of all of the trades that are occurring on a variety of exchanges. What this new proposed rule change is going to be able to do is kind of take some of the Citadel's market share that they have right now and kind of spread it out across a couple of different sources. This could potentially make the markets more competitive and in the end more fair. This is kind of the trend that we are seeing right now out of this new SEC chairman and all of the proposed rule changes. Now, if Citadel ends up taking a big hit from this, they may have to margin call a couple of their clients in one of their investment arms of the firm, or they might get margin called themselves. So this is going to be a very big deal going forward and an important update that we are going to continuously cover on this channel. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. So I hope you guys are having a great day, and I'll see you guys in the next video.